2, 1.
When most people think of the trillion-dollar space economy, they think of Elon Musk's SpaceX. But while everyone has been staring at Starlink and Starship, another player has quietly been constructing a massive vertical empire in orbit. Rocket Lab, ticker RKLB. Valued at roughly $57 to $59 billion, trading near $100 a share, this isn't just a quirky rocket-launching startup anymore. They just dropped a massive bombshell announcement that changes the entire space game. An $8 billion deal to acquire Iridium Communications. Today, we are breaking down Rocket Lab's massive bet on space infrastructure, checking under the hood of their rapid growth. Let's dive in. To understand why Wall Street is paying attention to Rocket Lab, you have to understand what they actually do. Most people think they are just a launch provider, competing with SpaceX. And yes, they build and operate the reliable small satellite launcher Electron, and they are aggressively developing their larger medium-lift rocket Neutron. But launch is only one piece of the puzzle. Rocket Lab has quietly built a massive satellite component and manufacturing business anchored by their Photon spacecraft platform. They don't just launch other people's hardware. They design and manufacture the satellites, components, and subsystems themselves. They operate in Canada, Japan, the US, and globally, serving massive defense agencies, governments, and commercial giants. They are what the industry calls a full-stack space infrastructure provider. Now, let's talk about the catalyst that has sent shockwaves through the industry. Rocket Lab has agreed to buy Iridium Communications in an $8 billion cash and stock deal. Why is this a big deal? Because up until now, Rocket Lab built the rockets and the satellites. With Iridium, they now own a live, fully functioning global satellite communications constellation. This gives them immediate ownership of valuable L-band spectrum and over 2.5 million subscribers worldwide, including pilots, mariners, first responders, and the US military. CEO Peter Beck called this acquisition their shortcut to becoming a self-launching space superpower. Instead of just launching constellations for other companies, they are now directly competing in the high-margin, recurring revenue world of space applications and connectivity. If we look at the financials, Rocket Lab is experiencing a massive growth spurt. In Q1 of 2026, revenue blasted off to over $200 million, a staggering 63.5% year-over-year. That follows a fantastic Q3 in 2025, where revenue grew 48% to $155 million. But here's the catch. Rocket Lab is currently in heavy capital investment mode. Because they are aggressively scaling, they aren't consistently profitable yet. Their PE ratio is sitting deep in the negative, around minus 300, and their return on equity is weak. It's a textbook growth-first, profits-later profile. The good news? They have a stellar short-term liquidity position, with a quick ratio of about 3.9. However, taking on that massive $8 billion Iridium deal, expected to close around mid-2027, is going to significantly increase their debt, leverage, and capital needs. So, where does the stock go from here? Over the next 2 to 3 years, Rocket Lab has a few massive tailwinds. First, launch cadence and Neutron. As the workhorse Electron rocket scales up launches and the new Neutron rocket comes online, recurring revenue from commercial constellation operators will scale right alongside them. Second, the Iridium synergy. Once the deal closes in mid-2027, Rocket Lab can cross-sell its manufacturing, launch capabilities, and global satellite connectivity as a single package. Third, a massive backlog. They have a staggering $2.2 billion backlog of signed contracts, giving them clear line of sight for revenue over the next few years. Fourth, defense spending. Governments and defense agencies are scrambling for resilient, secure space communications. Rocket Lab is a deeply trusted defense partner, which could translate to massive, multi-year government contracts. But space is hard, and investing in it is even harder. We can't talk about Rocket Lab without talking about the major risks. Competition. SpaceX is the undisputed 800-pound gorilla in the room. Larger rivals can undercut launch pricing or outbid Rocket Lab for massive contracts. Valuation tension. Because RKLB trades at a very high sales multiple with negative earnings, any slight delay in growth or missing a margin target could hit the stock incredibly hard. The $8 billion swing. Buying Iridium is an incredibly bold move, but it comes with immense integration risk, increased debt, and potential dilution for current shareholders if the synergies don't pan out. Execution and technical failure. In aerospace, one bad launch or a technical glitch in orbit can delay revenue and damage a company's hard-earned reputation instantly. Ultimately, Rocket Lab's acquisition of Iridium is a clear statement of intent. They don't just want to be a taxi company that takes payloads to space. They want to own the highways, the vehicles, and the data running through them. It's a high-stakes, high-reward bet on the global space infrastructure of tomorrow. If you believe in the multi-trillion-dollar space economy and can tolerate the volatility of an unprofitable growth giant taking huge strategic swings, RKLB is easily one of the most compelling companies to watch in the markets today. If you want to read into the raw numbers and the fine print yourself, I've included all of the sources used to build this breakdown in the description box below. But what do you think? Is buying Iridium a genius masterstroke to rival SpaceX, or is Rocket Lab flying too close to the sun? Let me know your thoughts in the comments down below, hit that like button, subscribe for more deep dives, and I'll see you in the next video.